In the last video, we started to understand why individual trades happen. In the real world, trading happens on large exchanges that match millions of orders. In the following, we will start by explaining the motivation behind large financial markets, and then we will go through the key requirements we have for financial exchanges. So, let's start with a story that many of us can relate to. Imagine you've come up with a revolutionary new brand of cookies. They're a hit, and demand is soaring. Initially, your grandmother's kitchen was sufficient for production, but as demand grows, you quickly realize it's not enough anymore. You want to scale up and move to a production facility. So you head to the bank, secure a small loan, and ramp up production. Your cookies are a sensation, and now you want to take your business worldwide. However, you hit a bump in the road. You need more capital, but the bank does not want to increase its exposure because you lack the necessary collateral for a larger loan. So it's clear, you need an alternative way to raise capital. You know there are lots of people out there who believe in you and your business and would be willing to invest. But how can you reach them? This is where the financial markets come into play. You need a scalable system to raise funds from a wide audience. Perhaps you could offer parts of your business in exchange for their investment. However, there are challenges. Firstly, you need a reliable marketplace for these transactions. This situation introduces several key considerations for investors and businesses alike. For example, you need liquidity, flexibility, scalability, and price efficiency. Let's go through these key requirements of an exchange one by one. Firstly, liquidity refers to how easy it is to exchange products. Having many trading partners and enough volume available at any time is crucial to give people the ability to easily enter and exit positions. To achieve this, an exchange should be open to many participants and trade a large number of different but standardized products. For example, retail traders, banks, funds, and market makers should all have the ability to trade openly with one another. For this to work, there are a few key financial products that are so general that they can be used as building blocks in many different situations. For example, stocks represent ownership, bonds generalize borrowing, and more exotic products such as options can be used to construct more specific personalized investment approaches. To decrease friction, exchanges standardize the mechanics behind every trade. Note, however, that there can of course be differences between exchanges. However, most importantly, there needs to be trust in the system so that everyone is willing to offer and exchange their available products. Finally, it is also important that the available products are offered at fair and efficient prices, since else participants would not be willing to interact with them. All these effects benefit from one another and can lead to a positive feedback cycle. So in a world where such an efficient exchange exists, that can act as a system where you can raise additional capital in exchange for ownership in your cookie business, you can now effectively raise large amounts of money in order to build out a production facility that you need to keep up with the soaring demand of your sensational cookies. In this ecosystem, trading firms play a critical role as liquidity providers and efficiency providers. They ensure that assets can be bought and sold easily and that prices reflect available information as accurately as possible. In this video, we've explored how financial products and markets facilitate the raising of capital, enabling businesses to grow and investors to find opportunities. Essentially, exchanges are modern marketplaces. They match many different participants efficiently. This is both important to provide reliability for each investor, but also enables large operations such as borrowing a lot of money from many participants at once. In our next videos, we will dive deeper into the mechanics of these markets and the strategies used by professionals to navigate them effectively.